Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Monday morning and a great weekend. We are kicking off a fresh week and we're going to start off with a look at what's going on with expectations around the Fed. So in 9 days, next Wednesday, we're going to have the Federal Reserve decide what it is. They're going to announce what it is they're expecting the economy to do, what the economy has been doing, what the headwinds are, and all that stuff. But the most important thing they're going to talk about is what their decision on rates is. Now, right now, 9 days out, this has crossed the all important 80% barrier, which had up until last week eluded target rate probabilities for that quarter point cut. And there it is at 87%. And that's where expectations are going to be that the Fed is going to give us one more quarter point cut to end the year. That'll be a full 1 percentage point or 100 basis points. Lower rates are going to be on the 18th than they were in September. And that's where we are. That number, gang. And for those of you wondering, Rog, does this influence the Fed? Oh, gosh, yes. Oh, gosh, yes. Yes, Rog, we're looking at a futures contract that's telling the Fed what to do. No, we're looking at a futures contract that's telling the Fed what we expect. And either in the next 9 days, the Federal Reserve will talk down these expectations as they can with different events and appearances, or they're going to leave it alone. And Jerome Powell had a chance to talk this down, and he chose not to. And actually, a handful of members have actually just kind of encouraged what is here. They are fully aware of what Fed fund futures are doing, no more or no less than they are fully aware what bond rates are doing, what the S&P is doing. Of course, they know what Fed fund futures are doing and what we collectively expect. And so that's where I'm going to have that confidence. That's where I'm going to use the data to make a decision about, hey, am I going to continue to trade whatever it is that I'm trading with the expectation that the Federal Reserve is going to cut rates, and that is a resounding yes. In other words, gang, as we've said for most of the year now, year is practically over, right? And what has this year been? It has been fantastic to be a bull. It has been an absolute waste of time to be a bear. And why is that? Because as we go into the anticipation of rate cuts and the continuation of rate cuts, they are going to be bullish factors for the averages, the broader averages, for high concentration weighted stocks. Is everything up? Of course not. That's not how markets work. But those things that we would want to see moving higher as lending rates go lower, right? Those borrowing rates are going to be lower. We're seeing the S&P, NASDAQ, Dow, heck, even the Russell continue to move higher. And this has not been something that is a new phenomenon. In fact, the best quarter of this year wasn't Q3 or frankly isn't even Q4. Despite the all-time highs. It was actually Q1 when the anticipation for rate cuts was as soon as March or May. So do not underestimate the power of being above key levels and focusing on higher highs and taking advantage of buying the dip when those dips happen. Please know those dips are never going to happen on good news. It's never going to feel like you're on the side of sentiment and the headlines, which are just garbage anyways, right? We don't want to trade with sentiment that shifts from morning to afternoon. We don't want to trade headlines. The people who write the headlines, their job is not to trade like you and me. Their job is to talk about the market, right? So we want to differentiate the job of talking about what has happened and managing risk, trying to take advantage of what could happen. The latter is our job, right? The former is a whole other thing. And they're not graded on how bad or how good their commentary is. Their commentary is just to get clicks. So if you've been watching Charts and Coffee for any length of time, you know we're not economists. I don't pretend to be a television expert. That's a whole other job, which has next to nothing to do with trading. So what do we have? We have overall uptrends. We have a Federal Reserve that's preparing to cut rates, or at least we anticipate there's a higher probability of that than not. And we'll continue to look for dips to buy. I think probably the most important thing in these conversations. All right, Rod, well, what do you got? The positions that we have right now are, where are they? There we go. These are the positions that I have on right now. In fact, one of our most recent trades was the XLI. That was an alert that went out, and we're still in that one. We're still in Disney. Those are the only two positions right now that are not in some sort of management mode in terms of being a profitable trade, and we're covering managing our reward, which is a great place to be, versus managing risk to our capital. Last Friday, Friday the 6th, I closed out LNC for a mild winner and closed out Amazon for probably one of the biggest trades of this month. And that's where we are right now. Now, December 6th got closed out. We still have December 20 running. We closed out some Walmart December 6th. We still have December 20 continuing to run in our favor. So let's see where that's going to go. All right. So as always, if you have any questions, feel free to type them in. Let me know what symbol you're looking at. Let me know if you have a position in that symbol or not, or looking to build a position. Let me know if you're bullish or bearish. Let me know what time frame you're looking at, right? So let's go ahead and jump into those questions. In the meantime, let's take a look at the S&P, kind of in a little bit of a holding pattern. In terms of what we're going to be, let's see here. In terms of what we're going to be anticipating, could be events that move the momentum, move the trend, create pullbacks and so forth. Aside from that December 18 hot zone, you'll see today's pretty quiet, which is not uncommon after a non-farm. Pretty quiet Monday. It's actually usually a pretty quiet week after non-farm payroll release. You'll see Tuesday, very, very quiet. Bank of Canada on Wednesday at 9:45. That actually has been a little bit of a hot zone for the U.S. as well. So keep an eye on that. That might be the most volatility in terms of a scheduled economic event that we have for the week up until that point. So BOC, Bank of Canada on Wednesday. Scroll down, scroll. Core PPI could be a bit of a market mover. ECB really hasn't been as much. It'll move yields. It'll move currencies around. Definitely for those of you that trade currency futures or Forex, you want to keep an eye on both those central bank hot zones. Scroll. And then you'll see it's actually a kind of empty calendar because, again, after NFP, it's usually pretty quiet. A lot of data has already been released. And so there's not probably a lot between now and next Wednesday, barring, I wouldn't even say the flash manufacturing is a big deal. Core retail sales might be the only thing between now and next Wednesday, the 18th, where we could get a little bit of data that could sway, but probably very unlikely. The path is set. There's not a lot of data here that would sway an 87.5% expectation for a rate cut, 87.1. And these are going to move around. Oh gosh, just in the 9 minutes we've been talking, it's gone up to 89%. We're getting a rate cut unless something unforeseen happens. The data that we're going to see between now and then, the scheduled events, nothing really should sway that. Okay, so let's see here. First up is I'm planning to join your Sector Secrets Mastery. That said, I need clarification about what else premium indicators do I need to get most out of the Sector Secrets trading room. GR, nothing. When you join the Sector Secrets Mastery, we give you a base template to work with. I don't want anyone feeling that after you've made the commitment for a quarter or a year, whatever it may be, that you need to go out and buy other things. Eventually, if you'd like to, you can. So one, the alerts that I send out, you don't need the indicators that I have to benefit from them because I give you the entry, the target, and you'll have, after you watch this workshop on risk management, you'll have a full idea of position sizing and stop losses. So that first month is going to be really an immersion in what a 30-plus year trader has done to get to this point in her career. And so that's going to be very much a learning curve for those first 2 to 4 weeks. In the meantime, you'll be getting my alerts. The template that I give you is my TOPS template, and it's going to give you a really great place to start. In fact, those indicators and that template is what I've used for most of my career. So you'll be able to use that when you start. And then after 1, 2, 3 months, if you say, Rog, I really like this one particular indicator on your chart. Maybe it's the daily price movement range, or maybe you want the full set of hourly price movement ranges. I will say when you're a member, you get the hourly price movement ranges for the S&P, NASDAQ, Russell, and the Dow. So there are a lot of things that we make available to members on day one where you don't have to do anything other than join the mastery. So thanks, and looking forward to seeing you on the inside. All right, awesome. All right, let's see, questions on the market. I'm considering RCL. Trying to wait on a pullback. I'm trying to. Thanks for your honesty. So yes, this thing has gone absolutely parabolic. Isn't that interesting? Royal Caribbean. Didn't they just change their CEO not too long ago? I'm trying to remember when that was. All right, so here we go. What I would say, and it's interesting that it's just taken off. I'm wondering what that news was, but I think their CEO retired, if I recall. Anyways, what I would do is take a look at the last major moves and just continue to pull 50% levels on that, waiting for, here we go, waiting for some sort of 50%. What I do when a market has gone parabolic, which to me is, here we go, remove. So what I do is I like to have at least some sort of pullback where traders know, am I duplicating or removing this thing? There we go. Where traders know that there's been at least some sort of reasonable amount of price weakness to a support level. And 50% is a really good place to do it. Barring that, I'd wait for a Darvis. But I will tell you, since it's been about a month and more since we've had a reasonable pullback, not even a gap close. So this thing's parabolic right now. So since we don't have a Darvis, since we haven't had a 50%, I would say you can look at a 382 or a minor low. So if a 382% pullback from the last major move doesn't, this would be a 382, but it also happens to be a minor low. You see the lower low surrounded by two higher lows. I would say the more aggressive it is, you see I'm starting with the most conservative thing that I've got, and then I'm getting to basically the most aggressive thing that I've got. And that most aggressive would be simply a minor low or a 382, preferably both on that one. And I hear you. You know, even any kind of down day would be better than buying an up day, right? So buying a down day like the 3rd, buying a down day like the 14th or the 17th, where at the end of the day, we're sitting near the lows, even that would be better than buying a call or buying on a high. Now, if you're buying shares, that's a completely different conversation. But if you're buying options, that's pretty darn important. All right. So that one's a tough one. I will tell you, that one's a tough one because of just how parabolic it's gotten, which just goes to show, you know, if you've been watching this all year, I mean, once everyone's kind of FOMO, because that's what's creating the very thing you're trying to avoid is the very thing that's driving this higher bonkers, right? But if you look at the whole year, it's been a very different scenario. It just seems that some kind of news obviously must have hit, and everything started to get much stronger just after September. And I don't know what that news was, but if you look at if you keep RCL on your radar consistently, you know, earlier there's probably the best setup we've seen in RCL that precedes this, right? I'm always looking upstream to how do we get here? Not what do I do with this? So that next time I see a pullback like this on the 2nd of October, that's really the buy. And that's the hardest part of trading, to say that I don't have much to do at 258. But if RCL is on the radar, if Royal Caribbean and the cruise lines or something you're watching, if you're looking at that ETF, if you're looking at travel, and this is a persistent and consistent part of your trading, then you catch that on October 2. That's a gorgeous mean reversion. And we haven't seen one since. So sometimes the answer was maybe nothing now, but upstream. All right, upstream. Question on, let's see, Alcoa. You know, I traded Alcoa some time ago, and we had a really great trade on this. And this is a red candle. So Monero, no, nothing on Alcoa going forward for now. In fact, XME has had a very difficult December. Of all the things I could do Al, in financials, I can't say that, here we go. I can't say that Morgan is my favorite in financials. I like the financial sector. No question about that. I've got Wells. I've got XLF as well. But of all the things I could do here, yeah, that would have to be actually probably at the bottom of the list. I like XLF. I think there are better trends. However, that said, it's a rising tide. There's a pretty good amount of support of the Darvis around 130. But I would have to say just about anything else other than maybe Chubb on a pullback, I would prefer. Maybe XLF itself. But it's not a no. It's just of all the things I could do, why would I take something that's sort of stuck and not in an uptrend? That said, the 130 area at the Darvis, not the worst thing I've seen, but I'd rather get a daily price movement range pullback or even a mean reversion on anything that has that green trend label. All right. Okay. What else do we have here? Let's see. Ren asked, good morning. Do I provide a recap of your yearly trades at the beginning of the new year? Ren, we put on dozens of trades. Are you asking if I'm going to recap over maybe 100 trades at the beginning of the year? Every day? So the simple answer is, Ren, no. However, the better answer is every single day, we put out the trade alert recap, which tells folks when I'm in every single day. And this goes out to the mastery members. Now, when I'm going to do a class, or if I'm going to have some sort of promotion, some sort of, hey, welcome to my mastery, this is why you should join. Yeah, heads up for the webinar. I'll share my trades viz from time to time. But please know, gang, every year Money Magazine puts out, and I don't know if they still do it, Money Magazine used to put out every year the hottest fund in 2024, for example. Does that mean I go buy the hottest fund at the high going into 2025? That would actually be the worst thing I could probably do. Okay, that said, when you look back on a trader's, the reason I share my recap every day is when you look back at a trader's year, yeah, you want to know if I make money or not. I get it. You may not know who I am, and traders are wondering, do you make money? Yeah. That's the simple answer. But here's the more complicated answer. Every quarter, every month, every week, it's its own type of movement. If I were to basically take my Q1 results, where I think 1 month I did over 100%, another month I think we did 80, and another month I think we did 60. If I were to take those 3 months and just talk about them all year, that would be very, very disingenuous, because that's not what the market was behaving like all year long. How do you know this? Any bozo who's still talking about 2020 is extremely disingenuous. It's 2024, it's practically 2025, right? So to go back, and I don't mind to share it and show those things during, like I said, different promotions. But the most important thing, and this is why it's so important to me that we put, and I share these with you all in Charts and Coffee. The reason this matters is this is now, right? Who cares what I did 6 months ago? Who cares what I did a year ago, right? Because if the trend is moving higher, everyone's going to make money, right? And it's really a matter of then going, well, Rob, what kind of symbols were you in? That's a much more interesting discussion. What kind of dips are you looking for? That's a much more helpful discussion. But this is here to show you, this is what I'm looking at right now. Consumer discretionary, financials, communications, industrials, and one stock in the staples. We just closed out a trade in insurance. So when you look at that list, you go, oh, that's where Rog's looking, and that's what's moving now. So yeah, I mean, we'll do that during different promotions. But again, it's always a look back, and who knows what we're going to get in 2025. It might be something that looks like 2020. It might be something that looks like 2023. We don't know. So that's where every trader's results are going to be in many ways a reflection of the current environment that we're in. Okay. All right. HPMR rocks. Yeah, I totally agree. HPMR rocks. Yeah, thanks for that. All right, gang. Thanks as always for the questions. We'll be back here tomorrow. Same time, same station. Look for that alignment. Find the strong sectors. Find the strong stocks within them. We are still in window dressing, and I will see you all tomorrow. Be good to each other.